So with adversity and change comes opportunity. We all know that the economy has been shuttered due to the panic over this virus pandemic. And we all know that this has affected millions of people in negative ways financially. That is the purpose for all this stimulus that has been pumped into the economy after all. The positive and negative effects of that have yet to be seen or understood, and probably won't be understood for a couple of years after this whole thing has passed. Just like the actions of the government during the 70s to pump up the economy wasn't truly felt until about 5 years after the fact, forcing that government to act drastically in order to reduce the double-digit inflation that had struck the nation at the time. We may not know what the true impact of all the stimulus is until much later. In the meantime, today, just like in the 70s, there might be investment opportunities that if you play your cards right, and if you've been preparing and educating yourself, could truly change the trajectory of your life. In this video, we're going to talk about one such investment opportunity. So be sure to pound that like button if you find any helpful information. And don't forget to comment down below on how you plan to take action. With that, let's dive right into the video. What's up, you guys? You're watching BTB Fusion. I'm your host, Derek West. On BTB Fusion, it's our mission to inspire you to take imperfect action on your finances and business through the power of technology. Help us in that mission by pounding that like button and dropping us a comment if you like what we have to say. And especially if you don't like what we have to say. Hey, we're not perfect here, and we appreciate the input from our viewers to help us improve and deliver the content that is needed in today's corona crisis-induced world. So as you know, thanks in large part to people not flying in airplanes much at all, or taking cruises, or just driving around on a Sunday afternoon, the price of oil has been rocked into unprecedented territory. And that's only the beginning. Throughout this entire crisis, production of oil, that is, people digging in the sand and the seas, sucking up that black gold and stuffing it into barrels to be shipped all around the world. Well, that production has still been going on, despite the low price, albeit at a much reduced clip than what has been occurring before. Illustrated by the now minted deal between the OPEC nations, the USA, Russia, to reduce production in order to support oil prices. And even with talks of Norway and Canada jumping into the mix. Oh, Canada. Maple syrup, hockey, and oil. With oil prices at an all-time low, is this really a good time to invest in black gold? Or is this another corona-caused media-induced hype? Well, yes and no. You see, there is in fact an investment opportunity here, just like every other time in the history of markets. But it is in fact like a lot of things, just an opportunity for clickbait for websites that need views. But as I'm sure you've heard of by now, oil prices for a specific type of oil, West Texas International Crude, went negative for a period of time starting on April 20th when futures contracts closed at $37.63 a barrel. The futures contract for WTI oil stayed in negative territory for at least a few hours before settling at $10.01 a barrel that Tuesday. Now the contracts were future contracts and they were for May, i.e. this month. But those May contracts were the only futures contracts to take a hit, as June WTI contracts slid to a close of about $6.50 a barrel. I mean, those are all sort of scary sounding numbers, but what does it really mean to you and me, the oil-consuming public? Well, oil prices dropping into negative territory means that major producers would have to pay buyers to take oil off their hands. Let me give you a slightly clumsy analogy to help you begin to approach understanding of what that means. It's like if you don't have any space in your garage because it's stuffed with junk you've purchased over a certain period of time. Well, if you can't sell any of the junk in a garage sale and you need space for your shiny new Lambo, you need to pay someone to take the junk off your hands or out of your garage. That, in a clumsy sort of way, is essentially what has been happening to the price of oil. People have been flying and driving and cruising so little that oil is literally just piling up in companies' garages, so to speak. Even with historic cuts by OPEC and its allies, who again agreed to the biggest ever production cut, one intended to backstop prices. You see, this continued fall in prices means investors remain unconvinced that the cuts can offset cratering demand for the commodity as the coronavirus pandemic keeps society from operating normally. Investors fear, rightly so, that demand disappearance and not just demand destruction is what we're facing at this point. So for you and me, yes, the price of the pump is going to continue to go down, or at the very least, stay at a relatively low level. Comment down below if you're in an area where gasoline is below $1 a gallon, by the way. But it's not like people are going to be paying you to put gas in your car. That would happen, though, if your local gasoline station, for some reason, ordered so much gasoline that it has no idea where to put the next order of gasoline that is coming through. You know, this gas station is also, for some reason, continuing to order gasoline, even though it can't sell any gasoline. But will demand for oil ever reach its pre-crisis levels again? What I'm asking is, will people travel at the same levels they once did in their cars, taking plane trips and cruising in P. Diddy-style luxury yachts? Heck, or just go on regular Carnival cruises? That is a question that I don't think anybody has the answer to. But then again, that's why it's an investment opportunity. Since the infamous negative futures contracts of oil prices have recovered somewhat, as of this recording, hovering somewhere around the $25 per barrel mark, some analysts expect it to rise in the near future. Others expect it to fall just as quickly. We do know the price of oil has traded as high as $63 a barrel in early January. So in the near term, you can expect for the price of oil to be volatile. Very volatile, as a matter of fact. But we like to think long-term here in BTP Fusion. What about oil's long-term price? If you happen to take a look at a chart of the price of oil for, let's say, the last 20 years, you'll happen to know that oil has risen quite a bit in certain periods of times and fallen just as much in other periods of times. Well, we know that oil's price is really a reflection of the demand for activities that involve mostly travel and things around travel. We've talked about car trips, plane rides, and cruise trips as a proxy for this activity. We know that the demand for these activities has cratered due to the shuttering of the economy and the house arrests, quarantining of millions of people, the shuttering of their businesses, and the furloughing and or laying off of their employees. That said, we also know that the economy can't stay mostly closed forever, and at some point it will be opening back up. The U.S. Treasury Secretary Steve Mnuchin has said as much in recent interviews, and several governors of several large states have already started to open up their economies slowly but surely. The plan is to have everything running at full strength by the summertime and continuing through early fall, hoping that the coronavirus will somehow just disappear. Now, a lot of this is going to depend on governors in their individual states and even local politicians in their jurisdictions making educated calls on what should happen based on the caseloads that they're seeing. For example, in a place like New York or California or Washington State, where the caseload was much higher than in the rest of the country, the call to keep the economy closed might be heard for much longer than a place like, let's say, North Dakota, where the caseload has been much lower. Well, unfortunately, one of the big ironies is that places like New York and California tend to have the most economic activity in the entire country. So leaving them shuttered longer will mean that there's just going to be less flights, less cruises, less car trips, and the economic impact on the rest of the country is still going to be pretty great as every other state opens up. But in the end, they'll open up too, both New York and California. That means that people will be out and about in their automobiles, and eventually they will be flying in airplanes, and heck, maybe even taking cruises. The question is though, will they be doing that at the same levels that they were before the crisis? The answer to that question is key to seeing the price of oil reach pre-crisis levels and eventually get back on its regular trajectories. If the answer is yes, then purchasing future contracts at today's low prices will seem like a genius move. If the answer is no, and in fact demand for flights, cruises, personal gasoline use to power your vehicle remains at all-time lows, then purchasing oil futures contracts at today's prices will seem like a fool's venture. So you have a decision to make if you have some cash sitting on the sidelines. This could literally be the buying opportunity of a lifetime, or it could not. If prices return back to their normal pre-crisis levels of anywhere from $50 to $60 a barrel, West Texas International Crude as their benchmark, then you could easily double, even triple your money. It is a possibility, though, that demand could crater for all travel for the foreseeable future and never again approach their pre-crisis levels. Personally, I'm going to sit this one out for a couple more weeks. And for the time being, I'm not going to buy into any oil-related or commodity-related contracts at this point, including gold. Too much speculation on what can happen in the future and too much volatility. And I'm not the only one. Major brokers are beginning to warn traders with accounts less than $5 million that trading in June future contracts could be an extremely risky bet. But to me, this is a fascinating commentary about how the media overreacts to certain events and how those events help to shape prices of commodities and equities around the globe. Add your own fascinating commentary to this video to let us know how you'll be taking advantage of this opportunity of a lifetime. Are you going to purchase June, July, West Texas International Crude futures contracts? Or are you just going to sit this one out? Maybe you're just waiting on your stimulus check to come through. Let us know in the comments down below. And be sure to like this video if you liked this video. And while you're exercising that index finger, be sure to pound that subscribe button and notification bell for more great videos on topics just like these, as we drop them weekly, and I know you don't want to miss it. And don't forget, a goal without a plan is a wish. A goal with a plan and no action is a wish list. Be sure to take imperfect action on your business and finances using the power of technology, and we'll catch you next time. Peace.